Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be covering tax deductions for homeowners, and I'm going to cover all these deductions and how you can qualify for them and if you don't qualify for them. So let me get the video going here. So the first area I want to cover is PMI, private mortgage insurance, because this is an area that gets a little confusing. Most people think they will always qualify for this, but there are income limits on this that will exclude you from this deduction. So let's cover this real quick. So premiums paid for PMI for mortgages after 2006 will not apply if your adjusted gross income is above $110,000 for joint filers or $55,000 for individual filers. You can't deduct dues to HOA, home insurance, and appraisal costs to your home. So those three areas are not deductible: dues to HOA, home insurance, and any appraisal cost. A lot of people think appraisal costs are deductible when they're not. First home buyer's credit is out there now, and this is a credit of $7,500. So make sure that if you did qualify for that, you took it. The interest you pay on your home is the largest tax deduction you're going to get from owning your home. This is the primary reason for itemizing your deductions once you buy a house, because that interest you pay is going to be substantial, and that's a full deduction on your return, which will have the biggest increase on your refund. Make sure you deduct all of the real estate taxes paid on your home during the year. So you have summer and winter. You're going to get two statements there if you're a first-time home buyer. Make sure you total up those amounts. You don't report them separate, so you're just going to combine the summer and winter, and you'll get a form from your municipality, the taxes you paid in. If you itemize your taxes, you'll get a much bigger deduction on the property taxes paid, as compared to only $1,000 if you take the standard deduction. So if you do the standard deduction, you're not going to get all the taxes you paid, most likely. You only get $1,000. You can also deduct interest paid on a second home, such as a vacation property. I'm not talking about a rental property, but if you just use the vacation home for yourself, any of that interest is going to be fully deductible. Home equity loans and lines of credit against your home also qualify for deducting interest. You're going to get, if you have a line of credit, you have your main home, and you have a second home, you're going to get multiple interest statements from those lenders. So on your tax return, there's going to be a box when you file electronically, which you can do through our site, HarborFinancialOnline.com. There'll be a box that says primary home. You'll combine, if you have two loans out on that house, you'll combine the total amount for that house. Then it's going to have a box if you have additional homes, and you'll put the totals in that box. So you do separate them, but you'll get the full deduction on it. You can deduct the points you paid on the purchase of a home and can include the amount you convinced the seller to pay on your behalf. So that second part is an area that most people don't get, just a small little area of a deduction that you can pick up on. Remember that if your home has been damaged by a fire, storm, or flood, you can deduct these expenses on your return. So any kinds of situations like this can be fully deductible. There are lots of rules and regulations, though, when claiming a casualty loss like this, so make sure you're following those rules. You can also qualify for homeowner expenses when it comes time to sell your home. Another area to look into, because if you had a big enough profit on your house, you may have to pay taxes. I have other videos that cover that if you're concerned about it. Most of the time, your house isn't gonna result in tax owed. You will get an exemption on that. But if you do have a large income, if you're married filing joint, and your profit from the sale of your house is $500,000 or more, you will have a tax liability on that house. If you're a single filer, and you have a profit of $250,000 or more, it will result in a tax liability as well. So I'm going to take you to our site real quick here. Go to harborfinancialonline.com. This is our site where you can learn more about credits, deductions, if you own a home, how you can save money, how you can increase your refund. We have an online calculator you can use. We're constantly updating the information. It'll show you what your refund's going to be, how to put in the deductions, and how those deductions will affect your tax savings. So I recommend checking out this site, harborfinancialonline.com. I appreciate you watching the video. We have over 100 videos on YouTube right now. You can search in any topic you want of tax, follow it by Harbor Financial. It'll bring up all our videos. From there you can jump from video to video. And check out our site, harborfinancialonline.com, when it comes time to prepare your return or just to do an online estimate. Thank you.